The jobs market took a turn for the worse. Now, there is some good news, but there's also some bad news. Of course, we're talking about the ADP employment numbers released earlier today in February. Private sector employment in the US grew by only 77,000. This was disappointing. We were expecting 140,000. It has been mentioned that a cautious approach is being taken by employers as they're really uncertain about the economic outlook. Here's the ADP number: 77,000 jobs created. This was the lowest low in the past 6 months, and we can see a real big drop off from where we were over the past 6 months or so. Now, there are different sectors within the ADP employment number. This is a divergence that seems to be growing between the good and the bad. We're going to show you both. First, here's the good news. There is some financial activities like banking. That added 26,000 jobs. That was the best in the past 3 months. How about professional services, business to business, things of that nature? That they added 27,000 jobs. That's the best number we've seen in 5 months. That's good news. But this is the best news. Manufacturing added 18,000 jobs, the best number in, well, a long time now. For those of you that have been following us for some time, I'm sure you recall Empire State Manufacturing Index, Philly Fed Index. Manufacturing has been bleak. Hopefully, this is a sign of a reversal. Now, the bad news. There's a nervous consumer. I think that's translating over into a declining leisure and hospitality, adding only 41,000 jobs this past month, a far cry from the prior 69,000 just last November. How about a nervous housing market? That could be translating over to weak construction numbers, adding only 26,000 jobs. Now, it's not a huge drop, but there is a trend that is softly moving lower over time. There are concerns about tariffs. Maybe that's the reason why trade, transportation, utilities is now negative, losing 33,000 jobs from the prior month. That is the lowest low we've seen in, well, actually a long time now. Is AI starting to change the jobs market? Well, I think eventually it definitely will. Maybe we're seeing the early signs. Look at the education sector, losing 28,000 jobs. This is the first negative number in quite a while. How about information technology, data analytics, things of that nature, losing 14,000 jobs? This is also the worst number we've seen in a long time. Which businesses are hiring? Well, there's definitely an answer. We break down the businesses in terms of the number of employees. In terms of the companies with at least 500 employees, they added 37,000 jobs this past month. For those companies with 250 to 499 employees, they added 31,000. Obviously, the bigger the company, the easier it is to add more jobs. So certainly the data is skewed, but we can see a trend developing here. Those businesses with 50 to 249,000 employees, they added only 15,000. How about those businesses with 20 to 49 employees? They added only 5,000 jobs. And the smallest businesses with 1 to 19 employees, they lost 17,000 jobs. So for whatever reason, the larger the company, they seem to be more resilient during current economic conditions. Smaller businesses, not so much. Here's a question. When will the Fed cut rates? Well, we might have an answer. We see here in red, that's the 425 to 450 level. In March, there's a 93% chance the Fed will not cut rates. In blue, that's the 4 to 4.25. That would represent a quarter point cut. Most likely, they're not cutting rates in March. How about May? There's a 38% chance of a rate cut, a quarter point cut. There's a 59% chance, no change. But June is a real question. There is now a 51% chance of a quarter point cut, a 25% chance of a half a point cut. There's only 23% chance the Fed will not cut rates. And this has taken a turn for the worse, or turn lower, we should say. Just over the past couple days, and in part due to the weak ADP numbers, there's a growing anticipation the Fed will cut rates in June, more so than before. And how about July? Well, there's only a 16% probability that we'll still be at the 4.25, 4.5 rate range. There's a 43% chance of a quarter cut, There's a 33% chance of a half a point cut. But June is the real pivot point, and I think for the next, foreseeable future, we should look specifically at the June contract that seems to be most representative of the direction of the economy. And especially now that we have numbers coming up at the end of the week, watch the numbers on the June contract, and we'll certainly revisit it as well. If the probability of a rate cut increases, that means that either growth is slowing and or inflation is slowing. Speaking of economic numbers, here's the calendar. Thursday, wholesale inventories. But of course, Friday, it's the jobs number. The really big unemployment rate as well will be released at that time. So we're going to watch the 10-year U.S. Treasury yield as well as the Fed funds futures. If upon receipt again of these numbers, we see a growing probability of a Fed cut in June, maybe even sooner, well, that would translate over most likely to weaker stock prices in anticipation of a weakening economic condition. We hope this has been helpful. We look forward to seeing you back soon.